I'm thrilled to be here with Eric Glyman, who has built companies around the idea of helping people and entities save money and time. Who doesn't love that, right? His first company, Paribus, targeted consumers, and his second company, Ramp, serves companies. We're going to talk about both and how it all evolved. And of course, given the economic environment, with inflation eroding our savings, saving money has become, of course, ever more urgent than usual. So let's get started. Awesome. Eric, welcome to Cornell Tech Bloomberg.
Thanks so much for having me. Great to be here with you, Scarlet.
Thank you. So a lot of the founders that we talk to say that they always wanted to be entrepreneurs. It's something they grew up envisioning themselves doing. Others figure it out along the way working for others. Your first full-time job after college was in finance. Was that part of a grand plan to, learn some of the basics before you branched out into your own?
It's funny, the most entrepreneurial job there is working in banking, but it was fun. I fell into it in a funny way, and it was funny. For most of college, my opinion, I grew up in Las Vegas and went to college in 2008, and at the time, China was emerging as the kind of the new big economy to take note of, and so I spent most of my college career thinking I was just going to live out there. We were connecting on this. I spent 2 years in total out there, including at Beidai. I thought I would work, and I had this kind of harebrained theory at the time that as quickly as China was growing, my speaking Mandarin was unique for someone who looked like me, but not too unique. There were tens of millions of people who spoke both, and I thought, wow, if I knew something about finance, maybe even bankruptcy and restructuring as well as Mandarin, that might be unique. And so that was my theory, at least in falling into it. I would try to learn something where it was a rare combination of skills, was the hope.
So you were an Asian studies major along with econ, right?
That's right.
And then you decided, I'm going to go into finance. I'm going to learn about how to restructure companies, so I have this area that I'm really specialized in. Do you remember if there was a turning point in which you saw, like, while you were working at a financial firm, you know what, maybe not. Maybe my harebrained scheme is not going to pan out the way I thought, and I'm going to go in a different direction?
Well, it was a lot of starting and stopping. We would serve companies that were on the brink of bankruptcy or maybe were in it. And so it was very hard to go out and say, hey, company X, would you like to go bankrupt this week? You had to go and hurry up and wait to go find those opportunities. For me, I found myself often wondering and wandering of, are there bigger things out there? Could I do more than wait for the next deal to come around? And found myself in that space. And I think I always was curious about people who built businesses and building. I think something that was a common thread both in my hometown of Las Vegas, which grew over the 18 years I was there, from 400,000 to 2 million people, to China, is people just built things. And so I kind of missed that side of seeing people go out, whether it was building parts of cities, building new businesses and entities. I felt kind of a longing for that. And so I found a lot of my not that I had a lot of free time working in banking, they definitely worked us, but I thought about that a lot.
It left you with some sense of, there's got to be more. I can meld in a lot of my own personal experiences. Going back to China for just a moment here, Obviously you took up a lot of space on your resume. You had this year abroad that you spent at Peking University. You had a couple of summer jobs there as well. You clearly were targeted in terms of thinking about what life after college would look like. I'm curious what you learned from that period in your life when you were hyper-focused on China, and what carried over into how you approach forming and scaling your business.
Yeah, the most jarring thing then, and it relates to what Vegas was like on steroids, but this notion of, the world is under construction. I think sometimes in East Coast cities and in Europe and other parts, the world is the way it is, and you find your place in it, find a job and become part of it. And nothing wrong with that, but I think when you're out in a place like Beijing, entire skyscrapers, parts of towns, you would leave, be away for a year, come back, and you almost wouldn't recognize the place. People just constructed new things all the time, and that I didn't realize it was really unusual at the time until I spent more years on the East Coast, where the pace was People were more kind of stuck walking between buildings, sort of finding their place in the world versus thinking, how do I work on that? And I think that was one of the most valuable, for me, moments in my life, seeing that. And also, too, last, just being in a totally different culture and, value system view of the world, which had a lot of, view the world differently in some ways, but you see different, you have to think about what do you believe in, and face that a bit more. And so I thought the experience of just being abroad and away for such a long period of time in a culture that was growing so quickly left a deep impression on me.
Yeah, building and constructing, and that's something that you kind of kept in the back of your head. So let's talk about your first company, Paribus. The idea came about based on some of your personal experiences. You were telling me how you worked at Express, the apparel store that sells jeans and tank tops and everything, and also from traveling with friends. Can you take us through what happened?
Yeah. So I had to work when I was coming out of high school. So my very first job was as an Express store, and for anyone who's ever shopped there, they're discounting all the time. Everyone always gets a deal, and so it might be Saturday it's 30% off of dress shirts, and if you happen to come back on Monday, you might notice it's 40 to 50% off, or you buy one get another one free, that kind of a thing. And so I think always kind of knew deals aren't exactly what you seem, what you think. And then later, once I was graduated, worked in banking, had more than $8 an hour in my pocket, started buying things, and it started happening to me. And there was a moment a year into my banking job where a group of friends got together, we booked a flight, we're really happy about it. The next day, we looked it back up to send the deal to a friend so she could come on the trip with the group of us. And we found it was $100 less per ticket. We were out about $1,000 between the 8 of us and didn't feel so good. And my job in restructurings, we read debt documents, credit indentures. So I did what I was trained to do. I looked up the policy. Turned out JetBlue would be happy to refund you the difference if you asked them for it. Spent time on the phone, and before we knew it, we had it back, and I just sat there and thought, I've seen some of this in my life and sort of do this for a living, and I didn't know about it. What's everyone else doing? And I wish there was some software, some way to track this, and so I started pulling at that thread and trying to figure out, could there be, a business behind it? And eventually, and we can walk through it, but that turned into Paribus.
Okay, but you were not a coder. You did not major in computer science. How did you come up with the technology wherewithal to be able to put this together? I mean, it's one thing to be like, I'm going to pull on this thread. It's another to actually build that business.
Yeah, so it's funny. So I took one class in college in computer science, and I actually studied, and my TF, who gave me probably one of my worst grades in college, was Kareem, who's my co-founder, both at Paribus and at Ramp. And I definitely had a beginner's mind, but knew enough to know, code is great at certain types of tasks. You can set it to go look at a web page and just check every day at 12 in the morning, what's the price? Has it changed? Put it into a database. If there's something to do there, maybe you could draft a note. And so we actually, I couldn't code and didn't really know what Python was. Couldn't code and do quite what a lot of folks at Ramp can do today, but I knew enough to actually Kareem and I met up, and we coded the first version in VBA, which is sort of a coding language for Excel. And so we did what we could. We bought a few things. We started seeing them change in price often, and we were very lucky, but it coincided with what became this massive trend towards both personalizing prices and quickly changing prices. So Amazon went from, I think this was back in 2013, 14, they used to change about 500,000 prices a day, 50,000 prices a day, to when we sold years later to Capital One, they were changing on the order of 500 million prices per day.
So this is more than just dynamic pricing. This is like, it's constantly changing. It's never stuck at one level.
That's right.
So you mentioned you sold to Capital One. How did that come about? How did that offer come about? Were you looking to sell? Did they come find you?
Yeah. So, for us, the whole premise of the business, just to give you the background, was we'd help people find rebates when the price had dropped just after you bought it. We'd send an email and get you the difference. And it fit really well into Capital One was trying to build the strategy of what if we could build credit cards that had your back, where the news you were hearing from your bank was not just, hey, there might be a unusual activity on your account or fraud or a late fee or something, but hey, we did something proactively on your behalf to help you.
We're adding value.
We're adding value. Your bank is looking out, and initially, like many acquisitions, it was around a partnership. I was hoping to convince them, hey, maybe we could partner together, and you would tell all your cardholders about a benefit we could design where anytime you swiped a Capital One card, you could know you get the best price on any retail purchase, and we could gain distribution. And they were interested in that. And it first delved into, could we partner together? Might they invest behind the company to actually, would you join us? Would you want to be a part of Capital One? And it evolved from there.
But that was never your goal originally.
No. It was funny. Originally, we told them, no, why would we do that? And I think that was not a common reaction to them. And eventually it turned into, actually, we might be able to do a lot more together than apart, which we can talk about all that. But.
So founders who sell their businesses don't always love staying on to work in the new organization. You actually liked it, and you were there for 2 years, more than 2 years, and you really enjoyed it. I have to imagine there was some culture shock, though.
Oh, totally.
What was that like?
I mean, so look, I'm kind of a millennial, and like I'll put it this way: most people I know are jumping jobs all the time, work here, work there, always looking for the door and what's next. And I think the most shocking thing for me on day one is you'd meet people. They'd say, hi, I'm, it's Sarah. I've been with Capital One for 20 years. I'm Tom. I've been here for 15. I'm like, what is going on? These people have been here forever. What are they doing? And it turned out Capital One really invested and thought a lot about how to take good care of people and help people like really grow in their career. And so it was shocking at first, but it turned out they definitely had some things right. Mm-hmm. I didn't know the first thing about credit cards. It's funny. I mean, I think I've been post-rebranded as a longtime fintech entrepreneur. I really learned about it there, and it's sort of one of these voodoo businesses that's hard to really understand until you get inside, and so I just had the privilege of learning about that and it's still a founder-led company, which was incredible, and also learned a lot of lessons too of what eventually led to Ramp.
Were you filling a specific role while you were there building out this part of the business for Capital One, or did your portfolio expand the longer you stayed on?
Yeah, it grew. So the first thing, often with acquisitions, they're very worried. They'd said this odd thing, which is we don't want to crush the butterfly, which eventually I realized that we're the butterfly. They're talking about us, and they don't want to crush us. And so we were 20-something people at the time of the sale coming in. And they let us sort of go and build Paribus and grow it. Along the way, it turned into a kind of a larger savings group. We ended up buying some companies. We rebranded and turned it all into Capital One Shopping, which has grown into the vastly larger scale than even Paribus ever was. Our mandate was: could you go out and build software technologies that would help Capital One cardholders, or I called it pre-customers, get more value out of working with Capital One, and so that was my mandate.
Okay, how did working on that part of Capital One's business, lead to what eventually became Ramp, which is helping companies save money?
So there were sort of three pieces that locked together. So first was just, our job was turning data into savings, and we would think about how can we use, it was email data, it was browser data to go and generate value back. We can talk about that, but it was, could you take a transaction that had already happened, might happen repeatedly, and give people insights? Next, we were bought by the credit card division. And so we got to learn up close what made it great, what made it so profitable. We also saw some misalignment. I had a lot of brilliant colleagues thinking about how do you get customers to spend more money, maybe earn more points, cash back, whatever, and we're worried about devaluing it to grow margin. As the savings people, we'd ask customers, did you want points or cash back, something different, and usually they'd say, I actually wanted more in my bank account.
Wanted the cash back?
Not even just that, they wanted more in their bank. The cash back was good, but it could be like 1 or 2% back on money you spent, but sometimes it would be clear of maybe not spending that dollar in the first place was 50 times better than getting 2% back.
So their answer to the questions were, I'd rather just have more money. If it means not spending, then so be it. But I'd rather have more money. You're asking me how you can give me more value for my spending money.
That's right. All of the questions were couched in this idea of how do we sell our product more and do something that's good for it, versus asking, what is the consumer actually looking for? And then what might we do? And look, I was really just struck by, okay, no one's really working on could you reduce the spend in the first place, which maybe if you're a giant scale player doesn't make sense because you're just cutting your own share of market. But if you're a new entrant, you might actually have a new way to add much more value back to the consumer and capture more. And last, like, for me, there's a lot you can do for consumers, and I still think there's a great business to be built in helping consumers spend less. Businesses are often, anyone who's ever worked at a large company knows, much more chaotic and sometimes disorganized. You might have, we've seen companies, and even today at Ramps, simultaneously spend on 7 sets of project management software, spending on things people haven't used in years. And so it jumped out to us as there might be a business to build that was designed where you'd have a card and software designed to help people spend less. And so we quickly jumped to, there's a market opportunity, and we felt we could more successfully go at it outside of the company once we had done right and made sure Capital One got a lot of value out of.
Did you ever try pitching this inside Capital One? I know it goes against the idea of Capital One encouraging their customers to spend, but was there any path to, I don't know, launching this and growing this inside?
Yeah, it was always challenging, and so we had Remit, and we were able to help people save, but these were separate and adjacent products, right? The credit card team was the credit card teams. The saving stuffs were things that you would add on top of it. But I think to really elegantly design it, you wanted these to work in concert, and there just was no way for us to get deep into it. So practically speaking, we could do things around the margin, around the edges, but not deeply. And so I certainly felt there was more to do outside.
Okay, so there's a lot of inefficiencies that you could help companies address to streamline their spending, reduce their spending. What led to the specific idea behind Ramp then with corporate cards and how they manage the reimbursement process or the validation process?
Totally. So first, we set out, it wasn't that long ago, it was February of 2019. We left March of 2019 incorporated, and we had this idea of what if your credit card would help you spend less money, and we sat down with lots of different entrepreneurs, finance teams. We met with about 100 before we shipped a single card, and we said, we want to save your business.
Market research.
Exactly. We'd go sit with people, and rather than saying we want to sell you a card, we want to save your business money. And there was a lot of people who said, great, let me tell you all the ways I think we're wasting money or we're getting charged more than we need to, which was great. And some even said, if you build this, I'll use it. But there was this recurring theme and thing that we had missed, which is, I'd love if you'd save me money, but it's time that I want to save a lot more. I can't get people to turn their receipts in on time. I can't close my books. I have to do this late. And so pretty quickly we realized the whole market was competing, not just misaligned incentives getting people to spend more, but to close your books, this thing that a company should do every month, you need to log into your credit card, you need to log into your expense management software, maybe your bill payment software, maybe your accounting software. And no one was doing the work to really streamline it. And it jumped out to us of if you are like a credit card business, great monetization, but no one really needs another credit card, you might be able to use that income stream not just on more elaborate and fancy rewards programs, but you might be able to build great software which automates expense management, which automates accounting, which helps people figure out when they're getting charged more on software than other places are. And so a lot of it was that initial kernel. I want to align my incentives with the customer, listen to them, and then let them inform really the roadmap.
So you're not a bank though, because you're not providing credit to the corporate customers, right?
Yeah, we are not a bank. That's right. We partner with Visa, with a number of different banks and institutions and lenders, but that we don't store money. That's right.
You're the platform and you manage the software. Your zero-fee corporate card, a lot of people call it a game changer in the market. What's the model behind the offering? How do you generate revenue if you don't charge fees for your cards?
Yeah, so the lion's share is really driven through interchange. So every time a card is swiped, there's a set of transactions. Of course, the vast majority of that goes to the merchant delivering the service. A small amount to the network, a small amount maybe to your terminal, maybe like a Square or a Stripe, something like that. And the largest portion, really, of the remainder of the interchange is going to a company like Ramp. Classically, this was really off limits if you weren't a Chase or an American Express or something. You just didn't see new entrants to it, and suddenly became possible to fill that role, to work with, we work with Sutton Bank and Celtic Bank, but really, for us working with the customer, that is the vast driver for our revenue, and we split a portion of that back to customers in the form of cashback, and the margin is what we take home.
So how do you acquire customers? You mentioned that you did this market survey where you talked to hundreds of companies. Tell me more about how you can save money or how you can save time. Did those guys end up becoming your customers?
They did, yeah, they did. I mean, it's, even for us, like we, when we launched just over 3 years ago, we had, it was today's 15,000, then it was 50 businesses out of the gate. It was all word of mouth then. We tried to come out, it's a very crowded category. This is something where, most people's credit cards, it's felt the same for 40 years, they don't need another one. And so we tried to be really deliberate on why should people care? And so we try to distill this down of most credit cards are trying to get you to spend more.
Yeah.
We want you to spend less. The pandemic was an interesting time. A lot of the benefits that so many cards had built of lounge access to travel suddenly didn't matter.
Yeah.
And businesses were trying to figure out how do we make our dollars go further, and our value prop really resonated. And so the biggest driver initially, and even today, our largest channel is still word of mouth and referral. We try next to really understand intent signals, what businesses are growing, who's hiring finance teams, when are they hiring, and we'll reach out to folks. We try to put on events for finance teams. We work with accounting firms, and now it's a broad set of strategies, but it all comes back to, can you build a product that really helps people and people talk about is still the lion's share driver for our growth.
And your customer base, companies of all size, of all different industries, geographies. I know that you're in the US and you serve US-based companies.
That's right.
And there are going to be transactions abroad when folks go on business trips to China or to Europe. But are you looking beyond, how are you thinking about expanding beyond US companies?
Yeah. First part of the question, we work with businesses of all shapes and sizes. The majority now are non-venture backed, but, work all the way from new startups to over a dozen publicly traded companies will use us for cards, expense management, bill payments, and the like. In terms of expansion, a lot of this has been following our customers. Over the course of the last year, we've seen, as companies have become hybrid, the need for just not just international acceptance, but we have international reimbursements. If you have employees abroad, you can one day send payments to reimburse employees. We have bill payments abroad, and today I think it's we're processing over $1 billion a month in transactions, and I think on the order of 5 to 10% of that are international. And so some of this has been supporting multinationals, and as our customers grow, we want to be there to grow with them.
What do you see as the next need to fill for your customers then?
Yeah, I think there's a few things we're super excited about. First, back to, our mission is help people get more out of value of every dollar and every hour. So we're constantly looking for ways in the process where our customers are spending more than they need to, or it's taking too long to close their books. I think a few things we're really excited about is, we can see very vividly, across our 10,000 plus customers, they're not all getting the same rates on the set of software, and it's very opaque. You go to a business site and it'll say contact sales to get software. We want to help people know not just where there's redundant spend, but actually if there's getting rates that are far above average, can you go and help people? We're interested in leveraging data to help people keep their books more efficiently. It might be one of our customers' first time having to figure out where do I book a LinkedIn ads, what part of my general ledger should that tie to? But we've seen that thousands of times before across customers, and so how can you leverage what's happening in AI and leverage pattern matching, machine learning, and bring that back. And so we take inspiration from businesses like Waze, where there was a time when you could go on MapQuest and go the shortest route. That was the fastest. And people realized real-time data would help you get there faster, avoid the traffic jams.
Right.
What if you could give people the insight of what's happening across the network? And so we're interested in bringing intelligence. We're interested in getting deeper into workflow management, procurement, and of course going deeper into travel too.
Yeah, if your goal is to save money, you can go into every nook and cranny of a company's operations. What does that feedback loop look like now that we're in an environment where saving money is so critical? You've got big tech companies like Microsoft, Alphabet, all talking about ways that they're reducing expenses.
Oh yeah, I mean it's interesting because I think the broader context for most tech companies is if you're selling software as a service or goods, you should expect negotiations and people trying to cram down and buy less. Part of our positioning of we're a free product that helps you spend less, I think that's been so valuable in helping us grow. And I think we'd grown 4 times year over year in terms of revenue last year. We're still experiencing very rapid growth. I think the thing that's changed most is when we launched in 2020, we were definitely an odd duck of saying we were a credit card that wants to help you spend less. I think it's now in vogue to say, I want to help you save money and time. And so I think there's more people interested in adopting what we're doing, and we love that, but it keeps us on our toes.
Before you were kind of a head scratcher, and now you're right in line with the zeitgeist. How do you see this playing out? Do you anticipate going public at some point? Do you think that it'll be a situation like Capital One where you'll partner with a bigger company and maybe get taken over?
It's a great question, and look, I think we always want to do right by customers first, employees, and be thoughtful. But I think this is the kind of business that of the top 150 companies in the world, I think something like 25 of them, more 30 of them are financial service issuers don't look and feel too different than a lot of the core products that Ramp offers. And so, I think one day as we continue to scale, exploring that route makes a lot of sense. Mm-hmm. Obviously, a long way to go. I think as much as we've grown, and I think it's very likely that our market share it rounds closer to 0% than 1. And so we love to get to 1, then maybe 2, and keep going from there. But
so there's a lot of growth potential.
Yeah.
Let's talk a little bit about your founder, your co-founder. You mentioned Kareem. You co-founded Peribus with him, and both of you moved over to Capital One together. Mm-hmm. You also decided to leave the company at the same time and start Ramp. How is it that you managed to stay on the same page? That's like a marriage that worked out really well.
It's a funny thing with co-founders. It's hard to get divorced. You go through everything, and I think that when you're look, we had so much pressure. Kareem, part of his story, he's an immigrant. He came from Beirut, Lebanon, and even over the course of building together, like that country has changed so much. And it wasn't just building towards a business, but there was visa issues, there was getting things right, and I think moments of working through the stress when you add that in, we definitely were both highs were high, the lows were at each other's throats, but I think like all relationships in family, when you go through hard times, I think you grow closer, you understand each other better, and can also learn what makes each other great. And I think we're very different people. Mm-hmm. We don't see the world in totally the same way, but I think part of what's made the relationship always work well is we try to be really upfront and deliberate of what's the shared vision, what are we trying to do and achieve together, and as much as we can, no ego, like hey, like I could be right or wrong. It's not about that. It's more about how do we build together and grow a team. And so I've really loved working together with him. I feel even the second time around, like lucky to be able to do that again. And I couldn't imagine building a business with anyone else.
Was it easier to build a company the second time around because you guys both knew your strengths and your weaknesses?
Totally.
Can you talk me through some of that?
100%. It's funny, from even the first time of, there was parts of the company we structured differently. Mm-hmm. I think the first time around I had product and design reporting to me, he had engineering to him, and sales. This time we flipped it. Turns out we believe having engineering, product, and design, data science work as a unit is much more holistic. You can have a much more functional company. So from little things of who reports to whom, mm-hmm. To even, I think startup companies that, we turned 1,500 days old tomorrow. There was a day 0, and when on that day it was just a sheet of paper. We were in an apartment, and that was our company, and we were trying to create this. How do you go from a sheet of paper and some folks to, this feels inevitable. This feels like this is going to be a
real thing.
A real thing, a company on the stage. And I think being a second-time founder that's had a successful exit, people feel just a little bit more open to believing in you. There was team members who feel, I'd love to work with them again. There was partners who remember how we treated them. I think if you do right by people, and it makes things a little bit easier. And what I think a lot of a company building is can you create a sense of this is going to be inevitable, this is going to work, and so it helped a lot.
Okay, that momentum to getting somewhere. And of course, for Ramp, you actually brought in your friend Gene Lee. So you guys went from 2 co-founders of Paribus to 3 co-founders for Ramp. What was that transition like to go from 2 to 3? Because with Kareem, you have a shorthand. You already know you can finish each other's sentences, right? Now you have to fit a third person into this mix.
It's Gene has a lot of strengths that neither Kareem and I have, which is it's fun. I've actually known Gene since high school.
So he was your friend first before you were friends with Kareem?
Exactly.
Okay.
Kareem and I had started Paribus together, but Gene was, I think, the second or third hire that came into Paribus. And so we had that experience of working together, getting to know, and I think a lot of, we knew we wanted to build what we were doing very quickly and rapidly, and Gene is just a world-class engineer, a lot of fun, and I think it's different, right? Like he was, even today runs a lot of our growth engineering efforts, kind of our special projects. We figured things out along the way, and certainly things we learned, but it's fun. I think
with 3 people, there's always someone that gets left out sometimes. If you start to have a conversation between 2, you got to say, hold on, let me bring the other guy in. Yeah. How do you guys manage that? Yeah,
it's not always perfectly, I think is the candid answer, but I think we try to. I think we try to come back to, and I think part of the strange part of just growing a company, we're almost 500 people, is there's break points in company buildings when, no matter the co-founder, at some point you can't fit everyone into one room, then there's sort of stacking of reporting and it just goes. And I think the key part is making clear the responsibilities. What do I own? What does Gene own? What does Kareem own? What should the company expect? For someone who just gets starting out, what can they count on me to do and report out, and trying to make clear those norms, figure out how we document decision making, because I think it's not possible always to have everyone in a room. But if we have shared values and good communication, it helps, but it's not perfect. I don't have a perfect answer.
Yeah, it's evolving constantly, I'm sure. As the CEO, you are the public-facing part of the company, right? So when you get funding, and you've gotten $1.4 billion in funding so far, are you the front man for that? Are you the one who's talking to the investors, the potential investors?
Most often, yes. In terms of representing the company and spending time with investors, that's one of my core jobs. But certainly, I think people want to meet the team and understand too. It's and I think I give so much credit to Kareem and Gene. I think part of the engine, people thought, all great engineering companies had to be built in the Bay Area, and we tried to show, actually you can get some of the best engineers in the world, and you can build, companies like this right here in New York. And, I can't tell that story nearly as well as Kareem and Gene and others can. And so, it depends on the aspect of where investors are looking to dig into.
Are you a New York-based company, or are you a remote company?
It's we incorporated. We're based here, and our headquarters is here.
Okay.
But we were 20 people when the pandemic kicked off, and so
the hiring came during the pandemic when everyone was working remotely.
Yeah. It's so I would say the largest presence certainly is here, and usually when teams are getting together, it's most often here in New York, for sure. But I think about half of the headcount is here, and half is elsewhere. And so I think we feel in kind of our DNA as a company, feels like the center, but you're right, we're a little bit all over.
I want to ask you about AI, because that is the new hot thing in technology right now. I just spent 30 minutes on Bloomberg Television breaking some of the earnings from the likes of Alphabet, Microsoft, and everyone's excited about AI and excited to tell the story about how they're going to integrate AI into their operations, save money, do big things. How are you thinking about AI and incorporating it into Ramp?
It's I think it's interesting. There's always hype cycles.
Are we at the peak of the hype cycle for AI?
Definitely, I think so for a little bit, but I also think it's real. I think it's both possible. We're at the peak, and There's something I think profoundly different about I think what's been happening recently, and so I think first. Some of the question we like to ask too is like who invented this and why and where did it come out of? And I think some of the companies that have been at the forefront of creating AI are fundamentally workflow and productivity companies like Microsoft and integrating. And I think part of what's been interesting is finally you can have software that you're not writing descriptively, telling it what to do, but is able to take on work that's tedious, requires kind of complex tasks, pattern matching and the like. And I think for us, we move money, but fundamentally we're a workflow company. We're here to reduce the amount of time that people are spending and money that they're spending. And so thinking about, can you start to insert AI as whether a co-pilot or automatically matching patterns? To kind of put it in more regular terms, like I think we've all probably seen the ability for AI to translate, whether it's from English to Mandarin or back and forth. That also can be doing things like something we're doing every day at Ramp is translating sales guy memos to what does that mean in your general ledger? How do you match transactions automatically? Can you see patterns across data and facilitate that back out? And so I think the potential both in terms of recognizing patterns at scale, both within companies, between companies, to do things like make expense reports a thing of the past, to show you when there's price discrimination, to I think better risk and underwriting. There's so many applications in financial services, so I think it's really exciting.
It's very exciting, and it costs a lot of money to invest in artificial intelligence and look for these algorithms and all this different software. Will there be, do you see yourself spending more money on this? Is it going to be a one-time investment, or is it something where once you start spending X amount, you're going to have to do that every 2 years or every 3 years?
Yeah, it's a great question, and I think the jury's still out. I think a lot of it is going to be almost like cloud computing, where this is just a part of infrastructure, where it's a baseline part of how data is processed, how technology is built. Most of our engineering team is leveraging, whether it's something like a GitHub Copilot to speed up, and so it's almost like an auto-suggest for coding to be more productive. And I think it's here to stay in terms of it. I think there's interesting practical questions of, do you adopt these mega models and leverage something like an OpenAI or Azure OpenAI in your model, or do you build things locally and train on your own data set? Is a practical question. I think most companies won't be building their localized model instead of trying to fit things. But I think this has been one of the most dizzyingly fast moving fields that I've ever seen or been a part of in my career.
How much time do you spend thinking about this part of the business?
Probably a third to half of my day. Like it's a lot.
Yeah, absolutely. Yeah. I also want to ask you about something else that's been driving headlines over the last couple of weeks, and that's the collapse of some banks, some regional banks in Silicon Valley. I know you're based in New York, but Silicon Valley Bank collapsed. First Republic was under some trouble as well. These were banks that were very popular with venture-backed startups. Yep. And you are a startup as well. So as a founder in this space, I'm wondering if the collapse of Silicon Valley Bank, the troubles that First Republic Bank is facing, is having any impact on your world in any way?
Yeah. It's very real. Like even for us, we support thousands of businesses that some of them stored money at Silicon Valley Bank, and so we were in the office all weekend working super late to both be through and make sure we'll set limits based off of cash balances, movement of funds, to make sure limits weren't interrupted. People always could depend on Ramp, even as they were needing to move funds around, there was a huge spike in demand later on, where people felt, often people's credit cards at some of these institutions didn't work anymore, and they were cut off. And so we were happy to be there as a partner to welcome new people to Ramp. I think it's changed. I think it's woken people up to the question of, where do you store your money? Do you want to keep it at a regional bank, something new where you're not sure of how strong it is, or do you want to have it in a large financial institution? And so we've seen, even among our customer base, a movement more towards these mega banks where
Bank of America, Chase, the likes.
exactly of those type, where I think it begs some of the too big to fail questions. Is this really what people were solving for? But I think for many of these startups, they were faced with the reality of if they didn't move their funds, on a Thursday morning, there might be a 30% chance that they couldn't access a heavy portion, and so
And they couldn't make payroll.
exactly. And so that was very stressful, and I think it's changed the psychology of a lot of finance teams. Teams are thinking about that, and 2 months ago, I barely encountered any startups thinking about this.
Okay, before we open up the floor to questions, the last question I want to ask you, Eric, is what's the number one way you save money in your personal life? Because you're clearly obsessed with helping people and companies save money.
I did take a trip recently. I know we don't do points, but I did go on a great trip for like $5 and some miles, which we can talk about that.
Which credit card do you use for points?
I have a couple. I have a Chase and an Amex, which we can talk about. We don't do personal cards yet, but I think realistically, it's funny. I actually have a bit of an opposite recommendation, which is like, I think that you can do a lot of over-engineering and lots of little things. I think actually in your personal life, getting the basics right, like really making the time of like, for me to like not focus on saving money here and there, kind of keep things simple and light, focus entirely on work or your family, whatever it is that makes you happy and leaves things to rest. I actually think can give you so much leverage. I think the one thing that you can't get more of, and I've come to value more of, is your time.
Mm-hmm. You're like the companies that you serve.
I've changed, grown over time, but I think simplifying your life in a lot of ways helps a lot with that. It's helped me.
Okay, so your number one pitch now to companies is we'll save you time, not money. Money along the way, but time primarily.
We like to do both, yeah.
Let's open up the floor to questions for Eric. We've got a couple of microphones that we'll pass around as soon as someone has a question. This gentleman over here, if we could pass along the mic to him, please.
First of all, that was awesome. Thank you.
Yeah.
So I guess two-part question. One is, as a CEO of a growing company, how do you allocate your time across the day? I think that's extremely challenging. And then secondly, from your journey in both companies, what was some of the biggest challenges? Was it fundraising? Was it scaling the business? Just curious about both.
Super good questions. So part of my role is, a couple things as CEO: guide the strategy of the company, make sure we're working on high leverage things, not run out of money, those kinds of things. And in a company that can grow and let's say double every 3 months, 6 months, whatever it may be, often the things that made us successful 6 months ago, a year ago, suddenly when your company is twice as big, only go half as far. And that keeps happening. And so I think one of the jarring things about the founder role and CEO role is, unlike most jobs where 5% better, 10% better, improve your sales pitch, reach out to twice as many people, work a little bit harder, very quickly it sort of changed from the banking world that I grew up in, where if you work 100 hours, that's the best thing you can do, except for 105 hours. Here, it's less about the number of hours. It's more about constantly thinking about where is leverage in the business now, and how do I change my schedule? And so I think one of the most common funny things about my own schedule and time allocation is it changes a lot quarter to quarter based on what's the priority of the business. And so I try to take the time to lay out the priorities, go pursue all that. I think things that are enduring though, and I think super important for startups who are building a company to internalize is, all a company is a collection of people. I think the single biggest determinant is, are you building a great team? Are you finding extraordinary people? When you're a startup, you don't have a lot of resources, so you're trying to find people who are way better than the market realizes or estimates, and so finding diamonds in the rough, people who are on steep slopes, but maybe the intercept is a little lower, but you see the high trajectory. And so even today, I'll try to spend about a third of my time at least just on recruiting, making sure we're creating a great environment for people to do great work. I think the biggest thing that's changed, to your second question, from the first startup, the first one we'd raised felt like more money than I could imagine at the time. It was $2 million, which is no money in the context of just the scale of the company. And we were always terrified of running out. And I think there were some good things. I think it's good for companies to really value every dollar, to be careful before kind of letting things stack up. But there were a lot of things that we did along the way that meant we always were going to build slowly. The second time around, we had raised more out of the gate, knew a little bit more about how the business might develop. And so we tried to operate more with an abundance mindset. How do you go find, pursue, swing a little bit bigger while keeping the right constraints and guardrails? Both can work. It depends on the context. I wouldn't prescribe either for every situation, but hope those are helpful.
Yeah, for sure. Thank you.
Cool.
If right behind him, if you could raise your hand again. There we go. Thank you.
Thank you, Eric, for sharing your story and the experience. It's very helpful insights. And I have got 2 questions. First question is, now Ramp is on a growing trajectory, but if we set the clock back to 4 years ago, when you start your business, how did you, why did you be dedicated at that time? Why that idea make you decide to quit your current, quit your full-time job at that time and take on more risk? And then the second question is, I'm curious about the way that how you grew your business. Like, do you build up an application first and then take that and show that to your investor first, or you have a business plan first and get money from investors and then start building your real application? Yeah.
Super good questions. On the first one of why did we go for it, I had only experienced it once before, and you kind of know it when you feel it. I couldn't sleep without thinking about it, of this business kept running through my mind overall, over and over. You'd go on a run, you'd be thinking about it, trying to savor it and research, and I get really stuck on things. Sometimes good, bad, but I think it was one of the things, if I just was obsessed, I couldn't take my mind off it, and felt like I wouldn't be happy unless I pursued it. And there's a time for everything, but I think it's good when it's in your head, you feel so strongly, and you have the time and space to pursue. I felt like I had to do it, honestly, for me, and I spent enough time kind of trying to de-risk to your next question of how did we form the first plan to maybe fundraise and pursue it. There was aspects of this business that we knew would work. It wasn't a mystery. Pyramus had a lot of questions. It was like, all right, if you scale this thing to millions of people and you were making money through rebates, there's no business that looks like that. Maybe it works, maybe it gets better or worse, but can you build this thing is it a good business? There was all sorts of questions. With Ramp, we knew if you could convince a few thousand businesses to use your credit card, that could be profitable. There was dozens of businesses, hundreds of businesses that look like this. So question number one is not, is a credit card business a good business, but could you actually build a credit card was a real question. So one of the first things we did to de-risk is show we could work with infrastructure partners and stand up a credit card program from scratch. The next question is, could you stand out in the market? Could you build a credit card that actually helped people spend less? At the beginning, we did it by hand. We talked to customers, we diagnosed their business, and we came with handwritten recommendations to save them money. We eventually found enough patterns to realize there's some software to build that we could go set and run to do that. And then the last question was, could you do that repeatedly? And the way we approached investors was like we did with customers. We were pretty open. We said, we've got this idea for a credit card that helps people spend less. I want to tell you about it. And investors don't really like single dots that you meet and would you like to invest? It's not like Shark Tank. They want to see these dots connect, and they hope that over time you kind of see this kind of looks up and to the right. And so we kept every few months kind of coming back. Here's what we've done. We've made progress. And every time they're like, how did they do that so quickly, to the point of, I think a funny thing I've heard, I won't name the specific investor, but they were a famous Airbnb investor. And I'd asked the person, how do you know it was right to invest, and why do you invest? He's like, they're the perfect founders. They didn't need any help. They don't need me. They didn't need my money. And that was the perfect investment, because I think you want to invest in teams that you really believe are going to be successful no matter what. They're going to figure it out, muscle it through, and you just be excited to be a part of that. And I think internalizing and knowing that Well, you can't always do it. You do want to build great partnerships, and we did. We counted on investors for a lot of things along the way. We tried to show we were continuing to build, make progress, hire great people, close new customers, find more savings in each way. And so it's finding like, what is that clear articulation for your business, the plan, and every time you come back, you've shown a little bit more.
All right, one last question here. This lady over here in the striped shirt.
Thank you for sharing your journey with us. So I have a question around the change in your thought process that you might have experienced. So let's say when you started like 4 years back, you were kind of wearing multiple hats, doing a lot of things on your own. But now as your company is growing, you have people to actually do the work for you. But you have to actually believe that they can do the work for you, right? Yeah. So how easy or difficult it is to trust someone else to do something that you were doing, 4 years back? It's
luckily most of them are much more talented than I am, which helps. Look, I think before hiring it helps to try to do a lot and take on more than your stretch, because often you know what great looks like. What are the problems that you sort of banged your head against and you solve? And I think a lot of the early hires, we just tried to problem solve together. And sometimes you'd see it, people would have great ideas and you'd say, I'd love, would you want to solve this? Like, would you want to come work together? And you sort of sit on the same side of the table. And so that's good. That helps. I think as you start to scale and you start going from a few people around the table to tens to hundreds, often it's being clear of understanding your own business or the function, right? What is everyone here to do? What are we aligned against? What are the leading indicators for success in a business? It's hard for me to know if an enterprise, I've never done enterprise sales, people run circles around on me. But over time you can start to figure out there's certain things. If someone's making a certain number of calls, has a certain number of visits with a client, is doing a certain number of demos, that might be a good indicator. And so, we often try to build like a shared understanding of what do we think this is? How do we measure it up front? Some of my job is just saying, hey, here's what we said we do. Here's how it's going. Is this right? Is this off? And kind of keeping people focused and aligned is how we try to approach it. And last, just try to find, ask people for advice. Instead of hiring someone, ask who's the best person in growth, who's the best person in comms, in something, and maybe it'll be the person you hire, or maybe they know someone that's 2 degrees, 3 degrees away, and you kind of follow that. And asking friends for help and great people or people you look up to and admire. Often they're much more willing, to help, or at least to recommend a friend, and you find your way there.
Tapping your network. All right, Eric Glyman, thank you so much.